have all of you here. For this program. This is a Vietnam Venture Capital program, and we are glad to have our guest here today, which is Yura from Dublin, Ireland. Hey, Yura.
Hey, Tien. How's it going? Hi, guys.
Yeah, very well. What's the crack?
All good, all good. How are you doing?
Okay, very well, very well. Yeah, it's glad to have you. Even it is an evening in Vietnam, and we got a team here which is from like a program around Vietnam, like Swiss EP. The Switzerland government sponsor program for entrepreneurship, and we got some angel investor and from university also, like NUS from Singapore and SMU, and some entrepreneurs that join the program here. So I believe that there will be some on the way, but it's the right time now. So we just start, I believe. Yeah.
Okay,
so
perfect.
I would like to have Yura. Please.
Perfect. I'll just share my screen then and go through the presentation, and we can go from there. Just 1 second, look at the right screen. Second. Not sure if you're seeing all these screens for me, but I'm just a few tabs. I'll stop sharing for a second and I'll get into it and then share again because it's not working the way it's meant to be. There, 1 second.
Okay, I think in the meantime, I believe that you guys have read the instruction, and Yura is the entrepreneur in residence at Elkstone. Elkstone is one of the largest multi-family office in Ireland, and they have done remarkable long time journey and with the own kind of investor in family offices, and with this one. Okay, now is you ready, Yura?
Yeah, I'm ready, and you're able to see my screen okay, right?
Perfectly. Okay,
really good. So cool. I will just take you through the slides. I have a few slides. I think we have about an hour and a half in total. Like that's the maximum. I don't suspect it will take all this time, but we'll see how the slides go, and then we'll leave some time for question and answers. So just going into the agenda again, I have 60 minutes for the slides and about 30 minutes for Q&A. Now, in reality, this might be slightly different. It might be, 45 minutes for the slides and 45 minutes for the questions, however way we decide to do it. But these are some of the things I'll cover. I'll just talk a little bit about me so you get an idea of my own background, how I ended up in Elkstone, and then I'll introduce you to the entrepreneur in residence position, why it matters, my experience at Elkstone, and a few other things that I think might be relevant for you as investors yourselves, for some of the things that I learned in Elkstone. So just getting into it, this is me. I'm Yura, I'm 25. I was born in, this is like my first day of school here, as you can see to the left, but I was born in Ukraine in the west, near, in a city called 𝗩𝗏𝗁𝗏𝗁𝗏𝗏𝗏𝗏, and I lived there for the first 9 years of my life. So Ukraine is in Europe. These are all the countries that it borders quite a lot of countries. And from here, I suppose, from the small city, when I was 9, I ended up moving to Ireland. So what had happened essentially is this was a completely new path, a new experience for me. I didn't know the language. I didn't know English at the time. And my dad got a job here in Dublin, and me and my mom moved. So fast forward a few years, I do the Leaving Cert, which is kind of the final exam of, in school before you go into college. I ended up doing quite well. I was very happy with my results, and I got into Trinity College to do my course. Trinity is, I suppose, a campus where, a historic campus, a really, really good university. and I was studying, 1 second in the chat. I will also just go next. So I'll ignore the chat for a second. And yeah, essentially I got into the course, which is BESS. The course that I was studying, this was as my underground, what it stands for is Business Economics and Social Science. And at the time, like this is 2022 QS World Ranking of Trinity College. It's first in Ireland and 101st globally. At the time in 2015, when I was doing my course, I think it was in the 80s or thereabouts, or 78th place I have written down. The course, BESS, the CEO of Ryanair previously studied this course, but you know, the low Ryanair, like the low fare, what's it called? Plane company.
Yeah, one of the biggest low fare
airline companies.
Yeah,
airline companies. Exactly. And essentially, I suppose after that, I did a year of this and I left. I didn't end up finishing that. And instead, I went to Southeast Asia to solo travel for initially 5 months. And then I expanded this to 7 months. And I suppose what I was doing is I started my first business, and I was also continued to learn online. So I was doing things like, you know, Coursera. I was doing lots of courses in things that were relevant for me at the time. My business, in hindsight, what it really was is me really freelancing. But at the time, I thought it was brilliant. I started a business, and this is what I was doing. And this was a really, really good experience. And really learning, like I learned a lot from this. And it was at the time, like everybody, including my parents, would have thought I was, you know, pretty crazy to leave a really good course to do this. But I felt pulled, and I felt like I needed to kind of go do it this way. And then when I came back now, I got extremely lucky. I kind of fell into the position of entrepreneur in residence at Elkstone. At the time, I was 21 years old. Yeah, I started there. This was a really, really great company. I'll go into some of the companies they've invested and some of the profile of the people that work there later on. But this was a really, really good. So I worked there, and I worked there all the way up until, for 2.5 years, all the way up until, I suppose, the pandemic started. So it would have been March when things started kind of, you know, changing. And I'll continue with what I did. So at around March, as I said, my journey with Elkstone ended, and just before in February, I actually entered a competition in Google. It was a startup weekend, and we had to build a company with 9 strangers, and we came second with it, and there was like a prize for first and second, you know, prizes. You get to meet like investors and different things like that. And later on, myself, this is me, and my co-founder Stephen ended up actually registering the business in August, and we have been trading since. I'll go into that. I'll maybe even show you my website a little bit later at the end of the presentation. And also at this time, I ended up doing a diploma in coding, because I got into a master's actually in Trinity, a master's in management, but I postponed it because of COVID. And in the time, I didn't want to waste any time. So I did a diploma in coding. I still have one more project to submit in Christmas, and then that will be finished with that. So this is where I am at the moment. I suppose this takes us up to current time. I have the business that I started, and I'm also studying a master's program in Trinity College as well. So I'll go next. So this, I'll focus, the main idea of this presentation is about the time that I spent in Elkstone, but this was just to give you kind of an overview where I was at in my own journey. So these were the 4 partners that worked in Elkstone. And just to give you like an idea of the profile of some of the people, Kieran, for instance, studied in Oxford and then went to law school in Harvard. Alan, previously PwC partner, like every single one of these guys had super, super high profile, super, you know, super intelligent, and working with them was a really, really pleasure. I mainly worked with Alan, and the idea that I worked on was actually Alan's, and he essentially hired me to, you know, work with him and develop this idea. He was essentially the founder, the initial founder of Elkstone, and then the partners then came in with him later on. So just to give you an idea again of Elkstone, some of the companies that they have invested, like this is not by any means a full list. There's quite a lot of them, but some that you might have heard are, you know, 𝗩𝗲𝗁𝗁, and they had an exit with this company. And there's a company called Mana at the moment that is looking really, really promising. It's drone deliveries. The company founder before this, he founded, or he was the CTO in a company that had a successful exit. I think it was called 𝗏𝗏𝗁𝗁 for like, I think over 100 million. So like a lot of these companies, you know, they're still like they're not exited, they're still in the portfolio, and they are doing really well. Another one you might have heard of is Let's Get Checked, and that's what that does is, I suppose, kind of, you know, health checks at home and things like that. So you get like a medical kit, you submit, you know, your blood and all those things, and then they check it for you and tell you if you have, you know, give you like if you have any sort of disease or anything like that. All of that from the comfort of your own home. Also doing really, really well at the moment. Meatless Farm, 𝗩𝗏𝗁𝗁𝗁, another great company, Irish founder, very, very young. I think one of the co-founders, 𝗍𝗏𝗁𝗁𝗁𝗁, who is involved in Apple, is one of the co-founders. I think he's one of the investors in that as well. So a big portfolio of really great companies. And I know like a lot of you are investors, so I thought this would be kind of relevant for you. And this was some of the investment criteria that Elkstone used. They wanted to invest into great people. So the team was really important for them. They wanted to invest into early stage companies. They weren't too interested in the later rounds of raising, and they wanted to get in early on these companies. They wanted the business to be scalable. So, you know, you can take it abroad and start it in a new country just as easily as it worked in its base country. They were looking for disruptive ideas, typically, you know, businesses that have the potential to revolutionize or change the industry, the way things are done. The example again, you know, the drone deliveries. If that works, you can see how that's going to hugely disrupt a lot of the delivery business. Usually they have a digital bias, so they want things to be, you know, digitally enabled. Like ideally it's some sort of software, not always, but this typically works well, as again, it plays into the scalability. And then capital light, they don't want to commit a lot of funds, you know, something that doesn't require quite a lot to set up, like it doesn't need a factory and things like that. And what I have here is, you know, investing in an asset. They want to invest into assets, and you might have to kiss a lot of frogs before getting to the princess. So they don't invest, like they have like their criteria, and if it doesn't fall into it, they wouldn't invest in it. Going next. So some of the main reasons why startups fails, just to be aware of it, I suppose, you know, like this is not really what the presentation is about, but just to give you a flavor of, you know, why a business might not work. No market need, ran out of cash, not a right team, just some of the top ones. And as an investor, you know, you need to kind of, what Elkstone would do is see these things, and they try to, you know, find out, is there a market need? They do their own research with their own analysts. They do, you know, extensive research into the team. The team is something that was stressed a lot in my time at Elkstone, and they wanted to see how the team works together, you know, what have they done in the past and things like that. That was also very, very important. And then in terms of investing, I think what they were always looking for, you know, is like the hockey stick revenue. You know, that's what everybody wants. They want to see a company that is growing year on year, month on month, its revenue is growing. And so this is what they would test, I suppose, making sure that the company is generating the right amount of revenue before going into it, and that it's regular. This was a really important aspect of their philosophy. So introduction into the entrepreneur in residence position, I suppose these are just some of the things that you will have the entrepreneur do, you know. So it's important that they have some of these skills and some of these ideas. They need to have obviously an entrepreneurial mindset, and they will be doing management of key stakeholders. They need to be good communicators. A lot of the role is actually, my own role was, you know, doing research, making sure that there is a market need, and, you know, what is the best way of doing things. In reality, you'll be given a lot of related projects. Like in my role, it was not like I had my main project that I was working on, which was about 80% of the time, and I'll go into it in a little bit more detail in a few minutes. And then there were other projects that were, you know, that came in with this that I was working on as well. Always, you know, negotiating, be it with our, you know, developers, third-party providers, or the partners that we're hoping to work with. Also a lot of presentations, pitching, finding opportunities, and then building the product and driving the project forward. So I suppose why does entrepreneur in residence matter, and why does it matter for the company and then for the entrepreneur? So it's a great win-win scenario where, you know, the VC or the company is getting the entrepreneurial mind, the spirit, people who are willing to take calculated risks, and then entrepreneur has the safety of, you know, having a regular, you know, salary, having some of the support in the company that already exists, and then also the upside if the project is successful. Another reason is it's an entrepreneurship century. All of the information and resources are there, but it's just combining them now, and that's what's going to give the result. So you need these roles, you need these people who see, like, okay, they might not be experts in this, but they see how they can combine all of this and create something that's really valuable. Opportunities discovery. So, you know, people who are entrepreneurial will be able to add value in the form of seeing new ways of doing things. So again, that kind of plays into it. They might, you know, they might have a tool that they've used in the past that they can implement even into the existing company, and that's going to add a lot of value. And that's something that what I mean by opportunities discovering. And another important reason is it's actually de-risking the future. The world is changing so fast that it's essentially, you know, building a new engine for the company. The way you would see it is you have your kind of main engine, which is the way the company has been running up until now, and then the second engine that you are building, which is how you're going to, you know, generate revenue and create those opportunities in the future. And that's what the entrepreneur in residence will do. In that, strategically, it will be a good option for the company. And, you know, how will you solve people's problems? As if you find the way to solve many people's problems, this will bring about financial gains as well. So in my opinion, I suppose if you were hiring an entrepreneur in residence, again, maybe some of you will be investing in some companies, and, you know, what to look for, or maybe it's your own company, you're considering hiring somebody for this role. Like my own opinion is traditional knowledge is a lot less important right now. Like in the past, it would have been more important, but now I think the way everybody gains information, they Google things, you know, they do their own research and they can find all that information. But skill and experience is something you can't actually Google. It takes a lot of time to develop and gain this. So I would say knowledge, like if you are looking to hire your own entrepreneur in residence, or, you know, I wouldn't necessarily look for their knowledge. I'd look for their skills that they can do. Maybe, you know, they're tech savvy, maybe they're great with design, with something else, with finance, with numbers. Look for the skill, and then look for also for their past experience, and obviously their attitude. I suppose I don't have it here, but they need to have a good mindset and persevere a lot. So moving on, qualities of good entrepreneur in residence. So ideally you want to have a proactive person. You know, this is what I found in my role I was quite good at, and in the second point, tech person, that was not really me. So I'm just kind of highlighting the two. In terms of proactiveness, I was good at finding, you know, different kind of, I suppose, what would I say, partnerships and ways that would gain value for the company in the future, and able to negotiate terms and things like that. But then in terms of tech person, this was not me. And as you've seen in my introduction, this was something that I seen as a weakness, and I ended up, you know, doing a diploma in it. I have one more project due to finish that. So it is something that, like for me, I'll never be a full tech person. My dad, he's a software engineer. He loves it. This is what he lives in. And, you know, this is his strength. For me, I just wanted to at least to know it to a level that I can manage it, because that's what I'd like to, you know, move into. You need to be able to learn on the job, you know, and do extra courses and things like that, because in reality, you're going to be faced with a lot of new problems, and the role itself is, it is really unique in the sense that no day is exactly the same. Like you really do, you know, you have a project and you're there from the start to finish, and you get to see it at all those different levels evolving. And you need to be a manager, I suppose, you know, managing people, managing different stakeholders. Don't be afraid to asking for help, mentors. That's something I've found really good. You know, you can connect with people on LinkedIn who are doing something similar, or have done something you would like to do yourself, and just meet them for a coffee. I don't know, you know, see if a lot of people are very interested in sharing their knowledge and experience. If you approach them the right way, if you maybe have some sort of mission that they're also passionate about, and in the way they'll be seeing that helping you is also helping that mission that they're passionate about. And you need to be opportunistic. You need to be an effective communicator, not know your strengths, you know, and not afraid to make decisions. And finally, strong-minded, jump past obstacles. These are just some basic things. I think, again, kind of goes in with the past slide. If you are looking to hire someone, maybe look for those things. And here, like for instance, I have tech person. That's because the company we were building was a technology company. If you're building something like a, you know, a legal company or like legal tech, you're also going to need a legal person, and things like that. Then some of the main projects I was involved in while in my role at Elkstone. So I suppose the main idea that we were building was a fintech app. So our app was what the idea was, and as I said, it was Alan's idea, and I was, you know, helping it shape it. Was basically to simplify investing for everyday users. And like the problem that we found, you know, is investing for ordinary people, sometimes they feel like it's out of their reach. So this was essentially a way to do this for them. So the idea was you would take a basket of stocks and, you know, combine it into kind of baskets that are common and easily to understand for the everyday consumer. And then our expert team would manage it. So this would be done by some of the in-house Elkstone employees. And like a few other projects that I was given and, you know, I worked on as well. There was Ethereum mining, managing some of that. This was like a project that Alan was co-invested with someone, and this took a bit of time. Then student management fund. This is like Trinity's student fund, and it was just getting sponsorship for them, and building relationships and things like that. I also, during my time at Elkstone, I ended up doing a postgrad certificate in entrepreneurship and innovation, also in Trinity. And from that, I also was able to, create some work for free kind of work for the main project that we were doing, which is the fintech startup. And again, this kind of goes into the proactiveness. I seen that we needed project companies. I knew we had one. I was like, why don't I propose our one? They were happy to work on it. And there were other projects like 𝗩𝗏𝗖𝗇 and 𝗩𝗏𝗖𝗇, and also involved in things like the H ban. I know this might be closely related to what you guys are about, but this essentially was me going into some meetings where I would represent Elkstone, and I'd be, sitting on the investor side of the table, and companies would go and pitch to us. And then maybe the most interesting ones, you would meet with them again and potentially invest in. Some cool things that happened during my time in Elkstone was like our fintech startup. What we were building, a company called 𝗩𝗏𝗄𝗏, who is New York based, from a LinkedIn message was able to connect with the founder of that, or sorry, not the founder, an employee of that, who then happened to be the son of the founder. They ended up coming out to Ireland, meeting with us. And like at the moment, 𝗩𝗏𝗄𝗏, they work with Revolut, which is a kind of a new bank. It's very, very popular. It's growing a lot. I think its valuations is like well over in billions. And they've recently, probably 2 or 3 years ago, introduced stock investing with 𝗩𝗏𝗄𝗏. But we actually met with them and had this as our idea well before Revolut got on it. But Revolut was also, a lot more funded, so they got to market actually quicker than us. But we were in conversations with them sooner, and again, all from a LinkedIn message. So there's something to be said for, connecting with different people on that. Again, day to day, just, I was doing things like building website, pitching, meetings, negotiating terms, dealing with third-party developers, research, among other things, but just some to give you a flavor of what the day-to-day role looked like. I think this slide might be an interesting one for all of you in the VC space. What's in it for the venture capital firm, potentially hiring an entrepreneur in resident, and what's in it for the VC. So first, for the VC, the top part, you get to consult for your portfolio companies. If you hire a good entrepreneur who has potentially, exited a business before, or has, deep experience, deep knowledge, they can consult you about these companies. You have access to this entrepreneur's new venture. Again, if it's a really experienced entrepreneur, has had a few exits in the past, this is a really great way to be in with them at the very start. Assistance in pitch reviews and, diligence. Again, I mentioned this before, but injection of new innovative ways of thinking, products, they might bring all of that change into the company, because typically entrepreneurs are good leaders, and they are, able to diffuse some of that into the wider company. And in the case of an already established entrepreneur, also the network, who they know, who has invested with them in the past, things like that. Then what's in it for the entrepreneur in residence? There's exposure to a large number of early stage companies. This was definitely the case for me. I got to sit in meetings with, companies that are raising rounds now, who have already raised rounds, hear about, their business strategy, how they're going to expand, like a lot was learned in those meetings. Then insight into how the VC term sheet, into the term sheets, you know, things like that. Then advice and sounding board. Actually, the term sheet, this was a really important one again. Just to go into it, like sitting in those meetings, I realized, you know, what kind of deals as an entrepreneur you should look, and also as a VC investor, like how much equity should you be giving away? What's, you know, a fair, reasonable percentage of the company to give away? What you should give in return, what you should get, at what valuation, and things like that. Super, super useful. And yeah, also came from this experience. Then, you know, there's advice and sounding board of all the people who work there. Many have seen a lot of companies, and you get to talk with them, you know, see what they think you should do. And, you know, all that is also really, really useful. Then you lower the risk for yourself, because you're not, you know, using your own funds. You have the support of all the company, and also really important. And then finally, the experience and network. The network of the VCs is, you know, they speak to a lot of entrepreneurs, a lot of investors. So it's a good network to be mingling in. From that point of view, you get to meet a lot of really interesting people. And again, some, you know, you become really good friends with, like a lot of the colleagues that I worked with. And here I just have some key learnings from my experience. I'll just go through of them. I think I have like about 11, and I'll talk to them. So let's just see. Yeah, so tech company needs to have a strong tech co-founder. And again, reason for this is, like, if you're building, you know, a tech company, you need a person who is also a tech person. Like my newest startup, I have a co-founder who is, he studied computer science in Trinity, and like this is what he's great at. And this is something that I'm doing my diploma and I'm learning about, but I'm never going to be as strong as him. So you need that in this role. And again, for many, many reasons, like if you're building a technology company, you need to know all this. Also, the reason that subcontractors might take advantage of you if you don't know something. So it'd be really expensive. So again, if you're looking for your own, you know, companies who to invest in and things like that, just make sure that if it's a tech, you know, it has strong technology people who are going to think of its future, of the product's future, and also, you know how the product works. I would say, like, another learning kind of took away is probably avoid legally heavy industries. Things like, you know, what we were trying to do with the finance startup, it was in a legally heavy industry. So there was like a lot of learnings from that. It needed to be regulated by the central bank. It needed, like, before we were, like, our app, our design was ready, everything was ready. And then we hit kind of the roadblocks in the legal side, even though we started like tackling them on really early on. But this was a really, really slow process. Like a lot of lawyers and things like that, they don't want to give, you know, a solution that might be on the edges of like what's right and wrong. They want to play it really safe. And if you're trying to build something that's potentially disruptive, it doesn't go too well. So again, if you're investing in something, I would try to stay away from things that require a lot of, you know, regulations and things like that. Finance is a good example of that, at least here in Ireland. Skip one. Yeah, this was a really good thing I learned also in my role. You know, we worked with a lot of subcontractors. We worked with subcontractors in the States, in Ireland, you know, in other countries like Eastern European countries. And before you choose to work on like doing a full project with them, do the testing, you know, give a small job to each one of them, a different job, see how they perform, see who did it the best, who you got on with the most and work with them. Again, this is something that could have saved a lot of money, as we ended up choosing a supplier that was close to home, but potentially it was not the best decision. We could have, you know, paid slightly more, maybe went to the States, or even went to Eastern Europe and paid a lot less and had the same contact. I suppose our decision at the time was, you know, we want to meet to face. This was pre-COVID, but in reality, you can be abroad and work with other people, as long as the time zone is probably not too far. It's the only thing to watch out for. Get to market quick, and you know, with MLP versus MVP. So MVP is a minimum viable product. Really, you want to try to create a minimum lovable product. And this is like our design of the app. It was really, really great. Like it looked brilliant, and we were really going for that. So we were, you know, the idea was there's 52 playing cards. What are the 10 cards that you want to see most often? In our case, it was with screens, you know, what user journeys are taken the most, what just focus on them, you know, and make that a really great experience. Just something we did do really well. And I suppose this is just like a good learning as well, because you don't want to focus on the whole deck of cards, just on the key aspects, create that perfected minimum lovable product and then move on. Oh yes, so this is, you know, something I learned from Alan, who I worked with very closely. Again, the founder of Elkstone. He was, you know, you never in any negotiation and anytime, you know, you're meeting various partners or investing in companies, try to stay away from making the first offer. In an ideal scenario, you want to be the last person to speak always, because you get a lot of, it's like poker a bit, you know, you get information about all the other people's hands, and then, you know, you're in a much better position to see what way you want to take it. You're just going to be, you're going to get better terms. Like, this is what I found from my meetings with, you know, some of the companies. Alan would always be the last person to speak, and, you know, he would hear everyone's opinion, and he would know, you know, what is the company looking for. Potentially what they're looking for is more than what he wants or less, and he can judge it from that, and, you know, get his response like, you know, more according with what he hears, position it for that. And this is actually, like, I've been trying my best to use this, and in something I did in my second startup as well, with various, like, kind of, we've had like investors and meetings like that. I always try to, you know, employ this and get the other party to speak first. So moving on, again, treating it all as a learning experience. Alan would often say, if it does not work, we'll get valuable learnings. And this was something that, you know, really admired in Elkstone. Like, I was not the only entrepreneur in residence. There was a few, and there was a lot of projects that they were working on, and they seen it as, look, we're building this other engine. Our core business is, you know, venture investing, it's real estate, it's the public stock market, but we will also want to be involved in our own companies. This was, you know, a new idea for them, so they were happy to take it, just to get some of the learnings, and also, you know, translate that to the companies that they invest in. And, like, I suppose one of the lines I just have here, that a lot of early stage companies, you know, they need a lot more money than they may anticipate, and just be prepared for that, pre-prepared for that, that in investing in companies that are not publicly listed, it might be a really long time before you see a return. It's very hard. It's really illiquid. You can't really sell it as easily. The chances are it's going to need more funding, and just be prepared for that. And that's something that Elkstone was definitely really good at. And, you know, they treated it all as a learning experience. Another thing learned, you know, costs are easier to predict than revenues. Try to budget what your project is going to cost you. If you're in the position of entrepreneur in residence, or if you're investing in a company, and see what they might need, hear what they think they need, but like try to look around the corners, because revenues are really, really hard to predict, but costs you will be easier at. And from that, you might, work out what the break-even points are and various other parts that might be really useful for you. This is just a simple, thing that I also learned. You should always try to under-promise and over-deliver. Managing expectations, necessary skills. So if you say you're going to double your revenue and you actually 4x it, you're going to look really positive. But obviously, if you say 4x and you only double it, it's going to be worse. And even if we change that to, you say you will 8x the your revenue and you only 4x it, like, it's brilliant result, but you're still doing it, it still doesn't match the expectation because you said 8x. So always be aware of this, and this is something I learned in my role as well. Connections are everything. I think I've realized in like some of the meetings that I was in that, sometimes they would want to invest. They would, the things that I mentioned, like the 6 things that they were looking for, they would maybe look past them if they seen that the company had already really great investors, or the person was really well connected, or the company had a really great reputation. So connections are everything. They're paramount to business, and always be thinking about this, how you can connect with people and things like that. So principle of sending the tennis ball court back to the other court. Like in this row, there's a lot of things coming at you. You really need to, like, you're building the product, you're talking, you're pitching, you're talking to other investors, you are dealing with all the third-party providers, you're managing everyone's expectations, you're talking to everyone. What's really important is to just hit back as soon as you get something, get that work done effectively, efficiently, and speedy, and send it on, because you don't want to be the bottleneck. So that, and like, I don't know, a simple principle again, and I think we were incorporating this quite well, is, marginal gains. We're looking at all the different things that we're working on and just seeing if we can make them 1% better. And, 100 things 1% better will give you 100% better off result. And I think we're coming close to the end. Yeah, closing conclusions. And that is, every, entrepreneur in residence, prepare for, long working hours, and have to love it. You have to, enjoy what you're doing. Try to shortcut your learning. Continuously learn online from mentors. This is something like in my role, I try to, in the morning, every like first hour, I just try to, pick a course on either Udemy or Coursera and just spend time on that, learning an hour in whatever, stage of the business we were at. Say we were, looking at finances, I'd take a course on that. Say it was like product development, I'd take a course on that. And this way, at least you're fast to, you're shortcutting some of the learnings. Know your own strengths, and, work with people who are strong in other parts that you're weaker at. Over communicate to stakeholders, what is progressing, what is lagging, all the resources that are needed. This is something that's also really, really important, just so, everyone knows where you're at and what you're doing. So I think that should be everything. These are my details. If you want to ever add me on LinkedIn, Instagram, Twitter, or Medium, they are here. And yeah, I think that leaves us for the Q&A 45 minutes. So we have
Thanks, Yura. It's a great thing. Yeah, and it's great to heard about Alan's talk again. Have a chance to meet him several times, and yeah, he's Alan is kind of one of the iconic investor in Ireland, with all of the consulting services he's done, even for the Minister of Finance in Ireland. Is one of the best men that we got in our country. And yeah, to the audiences, if you have anything to ask, please turn on your camera and we can interact with Yura. Yeah, not only about his position and also about what next, what we can learn from this team. Anyone want to ask question? Please. Just turn on the camera and unmute.
Hi, Tien. Hi, Yura. This is 𝗩𝗏𝗏𝗁. So just actually a quick question on the reasons why most of the startups fail. So those data that you have presented, is that only for Ireland centric or is it all over the world? And the percentages right on every reason why I fail, what does it really connote? Is it really the chance of failing, or is it the number of companies that have been compiled out of the 101 turn out that 42%, for example, became the reason for the failure?
Thank you for the question, Raul. So I think it was done by Forbes. So I don't think it's only for Ireland. I think it was looking, at more international companies, at all companies, and they were saying that those are the reasons for companies' failure that they have found, from all those startups. But I've looked at other research from not only that source, and they always come up with really similar answers where, there was no market fit. One, there was, the team wasn't there. The team was either too big, too small, just not right. And then also funding running out. They seem to be kind of repeating themselves regardless what country you look at. And so I think that they're probably quite universal, but that specific one was from Forbes, but there's other ones that I've seen from other years, 2018, 2019, all the way up to 2021, and similar answers.
Yeah, got it. Thanks for the explanation.
Okay, if anyone got a question, just raise your hand. And I think it's good to deep dive into this topic because I like entrepreneur in residence, even is kind of popular outside of Vietnam. VC like to hire somebody like that for that position, but in Vietnam it's it's not there yet. There's just some VC that try to adopt that ideas. But I got one question, Yura. It's entrepreneurs, like we all know, that they try to do a lot of things, even the long work hour, because they believe that they got the piece of the pie, right? They got the equity finally, so they sacrifice. But in the case of EiR, normally they do not have that in the particular startup that involved in. So what do you think about that? What is the incentive then?
Yeah, I think you are right in that it's not always, specifically mentioned. And I actually think that that's something that probably is really important to think about, and something really important to have that incentive, because entrepreneurs, you're 100% correct. They're there because they see the opportunity, and having that equity being early on, super important for them. So I think there's obviously other ways to motivate them. They have the ability of work in with some of the people that are in the company already, meeting, networking, things like that. It's a way to do entrepreneurship without all the risks that are involved. Obviously, if you do it yourself, you have 100% equity, but you're taking all the risk if it doesn't work out, where here the VC is taking the risk. So it's a fair, I suppose, deal in some cases. But I do think, introduction of some sort of equity is really important. And it's something that it's a conversation that should be had, quite early on, just so you are able to, and you can, the entrepreneur, easily explain to them, it's not, it can't be the same as if you were to start it yourself, because it's a very different scenario. You're not taking all the risks. So, but I think it's something that should be, touched on, and something that I think to motivate the, entrepreneurs and it's a good way. It's a good way to buy into that stake, and they feel like, you know, what they're building is theirs also.
I see. Yeah. Do you experience any kind of conflict between, you know, like the founders and yourself? Because anyway, you are the bridge, right? You work with the entrepreneurs, the founders, but you represent your company, which is an investor. They always like cats and dog. And so you are the one that in between. Sometimes you got some conflict. Do you experience that?
By founders, do you mean founders at Elkstone or founders of other companies?
Founders of the portfolio company of Elkstone.
Okay, yeah. Okay, portfolio companies. Yeah, so I suppose, like in my experience, what I found, what Elkstone has been really, really good at is they're really looking after the entrepreneur. So all the meetings that I was in, I think like many times that I was in them, the entrepreneurs had, you know, funds from elsewhere, but they actually wanted to work with Elkstone because the terms were more favorable for them. They didn't see it as, you know, just some sort of thing. We want to grab as much as possible. They really wanted to be there from the start and, you know, build that relationship. They believed in the business. They believed in the team. They believed in the founders. So for me, I actually, in all the meetings that I was in and, you know, I didn't experience that conflict too much. I would say the approach was very fair. And, you know, it was, you know, of course there was negotiating and things like that. You know, those negotiations that were had and, you know, people wanted to see best deals for themselves. But I feel like the way it was managed was really, really well. And actually the role of entrepreneur in residence, I'm pretty certain of, for those founding companies, the ability to talk to you is really, really important, because I've had companies that wanted to talk with me, you know, that were about to receive investment, and you correctly said that you were that bridge, and they felt more comfortable talking to you about it, maybe because you're not the investor that's investing and you're in a similar role maybe, and, you know, you kind of want to find out how is the company and things like that. So that's how you kind of manage it. But from Elkstone's point of view, I think they were really, really good at getting the balance between, you know, taking the equity and making sure that it's favorable for the entrepreneur.
I see. From the point of view of an multi-family office like Elkstone, I have seen that they invest like even in early stage. So more or less they involve like VC, right? But do they play like limited partners to any other fund?
What do you mean by limited partner funds? Like other?
They invest to some other investors.
My experience when I was there, that they typically wanted to invest like in the companies themselves.
I see.
Now they had something known as an investment club. So, you know, okay, they manage multifamily office, they manage wealth of wealthy individuals, but they also had like an investment club, you know, which was a way for maybe the wider network to get involved at a lower ticket size. But that was not them investing in something, but rather funds coming from, you know, wider group into a company, but it usually was a single company.
I see. Yeah, so more or less it's the main activity is yeah, more or less like a VC then. Yeah. See. Okay. I think that we because it's a new position, and also it's like you know, it's chance for people to, you know, get involved in this new topic, the new concept. So I believe that is I may do some kind of cold call just to have your comments. Maybe it's not a question, but I hope to have your comments so that we can discuss more with Yura. Okay, Taichin here, raise the hand. Welcome, Taichin. Comments or question about? Okay.
Yeah, I have a question about Elkstone. How do they measure their success? Do they use like IRR or some other measure? And how do they compare with their competitors? I'm not sure whether this is secret or confidential, but it's just interesting to know.
Yeah, absolutely. Really, really good question. So I suppose that the percentage return that they generate for their investors, it would definitely be something that's confidential, like as in I wouldn't know, because it would be between them and the investors. But what I do know is there was a very clear number for, say, real estate investment. Like they invested into a lot of student accommodations, things like that. And there was a clear number there. When they invested in the public markets, there was also a clear number return. With venture, it's a lot less unclear. And a lot of it is, as I kind of said in some of the presentation, is it's not liquid. So a lot of the investments, they're still, companies, they haven't had an exit yet. So it's still tied up. So it's hard to comment on, what the return is, because we won't know. And as the reality is that you just need a few of those companies to do really, really well. And that will generate the revenue for the whole, group, I suppose. I'm not sure if that fully answers it. Probably doesn't, but that's probably my best shot at it.
Do we know how do they compare against their competitors? Are they much more successful, or do they position themselves as much more successful than competitors?
I think so. Elkstone is, positions itself as the leading multifamily office, and that's the kind of category that they want to be in. Although they do a lot of things like VC investing, that's not they're not just a VC company. They do many other things as well. So in that position, I would say in Ireland, they're probably number one, because they have their own niche. In terms of, if you're looking at VCs as a whole, there's a few other really strong names in the Irish context, then also, in the UK context, which is nearby as well. But in their category, multifamily office, I would say they're leading the way, definitely.
Okay, thank you.
No problem.
Actually, I got the same talks about that. Yeah, Elkstone. If you heard about that in Ireland, yeah, they're the best in terms of family office. In terms of the allocation, Yura. So we know that they also invest in real estate, student accommodation, and public stock. So what do you know, or even can share roughly about the percentage of what kind of VC involved in the whole allocation?
Out of the whole, it's a very good question. I would say they do a lot of deals. So, and the deals, they have a minimum ticket size, of what they will do. And so I can only really, guess, I suppose, from that. But I would say they're equally, split in many ways. I would say actually the public market is probably the least of their thing. I would say what's leading them is real estate and VC. The public markets, they have a few clients that they would do this for, but it wouldn't be the main. It's just if the client wants this, they would, accommodate. But I actually think it would be between real estate and VCs that would be leading in terms of their capital allocation.
Yeah, I see. Yeah. Anyway, real estate is big time in Ireland, so yeah, that's why they're also involved in. Yeah. So I think for now, I think some comments from your side, the audiences, it should be really helpful for our discussion. So Andak, do you want to add anything? Any comments related to what you have known, and also what you want to add into this? Are you still there, Andak?
Yeah, I'm here.
Hi.
Hi, Yura.
Hey.
Yeah, I think that's great session. It's something very new to me. This is the first time I've heard of this term. So yeah, so I think that's great. But as you said that in Vietnam, so I have a question that in Vietnam, this model is not popular yet. But have you seen any successful case, anyone that you know in Vietnam or in this group? Anyone has seen this? That we can, for example, to meet them and then learn directly from them, like real experience. Thank you.
Yeah, actually, I can share that because Yura, I think you're not very familiar with this. Yeah, but we do hope, Yura, in the future, if you in your connection, if there are any entrepreneur in resident in global that we can connect with, it should be great. And please just refer to us. So now, one of the newest founded VC in Vietnam, they 𝗩𝗏𝗁, they engaged this position. Yeah, 𝗩𝗶𝗲𝘁𝗂𝗿𝗺 is an entrepreneur in resident of 𝗩𝗏𝗁. He formerly worked with 𝗩𝗶𝗁𝗁. And the second one that have introduced this position is a Frame, a Swedish company in Vietnam, and they try to do the venture builder, and they introduce that entrepreneur in resident into their structure, even it's not really successful. There's many reasons for that, but at least the two names that I understand is like that. Normally in this area, we got entrepreneur in resident as an successful serial entrepreneurs. They may exist somewhere and they return to work for the a VC in because they got method how to build company and how to exit from that. So that's just something that we got in this market. But in the near future, I believe that if we involve entrepreneurs themselves into this model of VC, there will be there's not many serial entrepreneur in the market that we can choose, right? So normally we just choose somebody with entrepreneurial mindset and put them there. And with the guidance from Yura, for example, we know what should we do with them. So it's I think it's a mix between associate themselves that position and an entrepreneur in outside. So yeah, it's something that I know about this, and I hope that we can discuss more. Is that okay, Andak?
Great, thanks very much.
Yeah, thanks very much, and okay. So I think 𝗏, please, if you want to add anything, any comments, 𝗏.
Trying to get there. We go.
Hello, 𝗏.
Yeah, no, that was great. Thanks. It's great getting your perspective on the experience as an entrepreneur in residence. Our program uses the term, so the term entrepreneur in residence is started to be used quite widely. And every program has their own kind of interpretation of it. We have ours, but we bring people in who for a month, maybe 2 months, that we call an entrepreneur in residence, and we embed them in accelerators or incubators. And then a little bit, like Tien was describing, they tend to be people who've exited a company, maybe. And they are footloose and fancy free for a few months. And it's an opportunity to come into Vietnam. So, but I think it's a great resource if you have a fund, just because I think, as Yuriy was saying, oftentimes the companies identify more with the entrepreneur in residence than they do with the VC, and you can help, kind of those companies develop faster. You can probably do better due diligence. So it's a great idea. And so thank you, Yura, for sharing.
Yeah, thanks. Yes, it's great. Yeah, what you want to add?
Sorry.
Go ahead.
I was just adding to Tien, your point of, you're absolutely right. The serial entrepreneurs, like they're kind of ideal candidates for that, but getting them is often really, really difficult. Like I actually think, like as I mentioned, I was 21 when I was in this role. So like, oh my God, like I was like, what? There's at times, like I learned a lot. Like it was a fantastic opportunity, but I do think there's something to be said for, going and getting someone who has had that exit. I think you're in a much, much stronger position. Now it depends, there's different projects that you might want to do. But for some of those, like we were doing a really project that was super ambitious, and having like that experience would have been exceptionally useful. So it is, you know, but maybe getting those entrepreneurs is like a whole different thing. It's like, might be a lot harder and things like that. Just something to consider also.
Yes, I got one question for 𝗩𝗶𝗄𝗁. How do you choose the one that's suitable for entrepreneur in residence in your program? What is the main important criteria for them?
So we look for specific needs of so we work with accelerators, incubators, and then we have an international network, a little bit of an advantage there. So, you know, the headquarters is in Europe, but we also have a lot of activity and connections in the US. And then the program is in 7 countries. So we use that network to kind of reach out. Initially, we had kind of a entrepreneur who was setting up his VC fund, who was traveling the world making connections. And so he identified a lot of people. And then that just kind of has spread. So I think Yura mentioned a lot of it is the connections. So our program's connections, you know, I like to say it's all my connections, but it's the fact that there's, you know, 20 people in the program. We're all connected in some ways around the ecosystem, the global startup ecosystem. And so that's how we've done it.
Yeah, I see.
And Vietnam's easier than many places, because a lot of the world, particularly Europe, the West, you know, Vietnam's exciting, it's doing great things. So it's relatively easy to bring people in. And you don't have, hopefully this isn't bad to say Yura, but we don't have to pay them a lot here. And so we don't with our program. We can't. The Swiss government won't let us pay. But it's a great opportunity, you know, to connect, be exposed to people. If you have your own startup, maybe like Yura did, it's a good platform to start from.
Yeah, I see. I think anyway, they not come here for the payment, right? They come here because of many other things more valuable. Yeah. So anyway, the system worked well. I see.
I think we hope.
Yeah. Thanks, 𝗩𝗶𝗄𝗁. Thanks very much for the add-in. It's great. And yeah, Donna, please, you want to comment or add anything? What do you think about the position, and yeah, what else that we can do? The suggestion, anything? Donna, you still with us?
Yes, I'm with you, but because I'm using my phone, so the video won't be that great. Thanks for organizing this, and thanks for sharing, Yura. Yes. Okay. So I work in an incubation with the university. We do have an entrepreneur resident, but it's so different. I think yours is the legit. So there's the legit way of. What legit way? I mean, it's more proper way of entrepreneur residence, how it works. Like, it's super hands-on in guiding the founders from end to end. Yeah. For our side, I think it's more connection and guidance and mentorship. So very different way of entrepreneur in residence. Yeah. So yeah, thanks for sharing your experience.
No problem. That's cool. So is your just a question? So you were saying you're the entrepreneur in residence. It's like you're looking for mentors essentially for other companies.
She's a major. Okay, so we have one entrepreneur in residence, and she is more like a powerful connector. And she provides guidance and advisory, but she wouldn't necessarily go into the the design thinking, the lean canvas, or check in on you so regularly. So she's more on the advisory role, I would say. Yeah, it's a bit different.
Yep. Got it.
Yeah, I see. Anyways, the incubator is a little bit different from the VC, and yeah, the role is because you invest there, you may lost your money, so that's why you ask people to do more, right? But incubator for university maybe it's not. I'm not sure. Yeah.
Sorry?
I'm not sure that if the entrepreneur resident in university and incubator they got the full access of most of the thing, or they just do like connector, because yeah, connector is one of the great things that entrepreneur in residence need to do, right? Not sure, maybe it's because of the form of incubator is different from VC. So yeah, they use less of yeah, the power of yeah, EiR maybe. Yeah.
So for our entrepreneur residence, because she sits on board of many different associations, so she's a very powerful door opener for, of course, not all sectors or industries, but yeah, she plays that kind of role. So for our startups, so for guidance in some of the more how-tos, she will normally connect to the relevant mentors or advisors instead.
Yeah, I see. Yeah, I see. Yeah, so it's more or less about the methods. Yeah, thanks, Donna. It's great.
No problem. Nice to see you.
Okay, Roel, yeah, you want to add anything?
It's a question actually, Tien. So I just quite curious whether the entrepreneur in residence or executive resident, do they also invest some money in the startup company that they're acting as EiR, so that they have more skin in the game, and then definitely it will add in for the success of really running the startup company?
I think the answer is probably definitely yes. Now, when I was 21, I was definitely not in the position to be doing that. But I think in like even all the employees of Elkstone, they have the ability to invest in the companies that are being brought in. So, you know, the companies that are being brought in, they're really believed in. And like I have, you know, some of my friends, they're venture analysts at Elkstone, and some of who, like, they're going to the Web Summit soon, that I'll hopefully see them there. And they, like, I know they've invested in a good few companies, like from their own, you know, salary. Like, it's not going to be the same ticket size as the, you know, wealthy investor, but they did the due diligence on the company, and they want to be part of it. They really believe in it. So, but I think you're absolutely right. If you have more skin in the game, it's more likely, you know, you're going to be more aligned from the start.
All right. Thank you.
Yeah, I see. It's great. And yeah, I think just only one slot to go. And anyone else that I don't have a chance to listen to your voice, I will do it in the next event. Okay, so and Long, please. You want to add any comments from your point of view as a VC?
Hi, hi, Tien. Hi, Yura. Thank you for sharing with us today. What an incredible journey you had. Sorry, my video is not working at the moment. So I just have a question, probably following up on what Roel has asked. Do you have a fiduciary duty with Elkstone to refer any opportunities you had or you come across back to Elkstone? The reason I'm asking this because could you, for example, if you meet a startup that has huge potential and you want to just invest all your money into it, could you do that? Thank you.
Yeah, really good question. I think in terms of, there's no legal obligation for me to do that, but because, you know, I'm no longer in Elkstone. But I think if I seen a startup that I really liked, I would just refer them to, you know, either to one of the guys or Alan or anyone there, if I thought it was genuinely a really good idea, and, you know, I'd just send it to somebody, have a look at this. But it wouldn't be like, I wouldn't be legally obliged to do this.
Right, okay, understood. Thank you.
Yeah, thanks, Long. And Long is working for a VC in Vietnam, kind of one of the more active here. So yeah, okay, yeah, Yura, thanks very much for the sharing today. And I believe that is add more, you know, quite a lot of value to not only the audiences, we also got some one community that follow on our chat. And I believe that in the near future, we hope that we can use it, you know, the entrepreneur in residence position in Vietnam more, and we can return to some of your guidance very soon. And thank you very much for your sharing today.
Absolutely, no problem. Thanks so much for having me. And I was just going to say, if any of you guys are ever in Ireland, Dublin, let me know, and can meet for a coffee or whatever, just show you around or anything like that. Always open to that. But really, really thank you for the opportunity for sharing this. It was a lot of fun, and hopefully, I don't know, I don't know what anybody got out of it, but it was fun to do. It was fun to prepare, and hopefully there was like one little maybe insight, and that's it. That was of some value to somebody. That then it's all worth it.
Yeah, perfect, Yura. Thank you very much. And I believe that is a great chance for you guys to just connect with Yura through LinkedIn. He's quite active there, as you know, his job. So yeah, thanks very much, guys, and have a great evening. Have a good day, Yura. Bye.
Thank you. Bye-bye.
Thank you.
Bye-bye.